So here is everything that you need to know about the Producer Price Index report. So this is the PPI report, and I'm going to be sharing my screen with you in just a little bit. So what's going on, team? It's Ricky here with TechBud Solutions. Hope that you guys are all having an amazing Thursday. So today was the PPI report. If you guys haven't been keeping up to date, I made a video yesterday making you guys all aware of the PPI report. So this is like the CPI, which is the Consumer Price Index, but now it's inflation pretty much on the producing side of things. So, is inflation going up or down for producers and manufacturers? The reason that this is so important is that this type of report is normally used to be able to forecast future increases or decreases in inflation on the consumer side of things, right? Because if we're seeing inflation rise or decrease on the producing side of things, that normally gets passed down to the consumer, later down the road. So that's the importance and the value behind the Producer Price Index. The report came out today, and pretty much what it came out to was our previous inflation report for the PPI was 6.2%. If you go to the bls.gov/PPI, which is the free website where this actually gets posted at, it's the U.S. Bureau of Labor Statistics, you can see that we saw an increase of 0.7% for the month of January. The market expectation, we talked about this yesterday, was 0.4%. So 0.4% was what was expected. What we saw an increase of was 0.7%, meaning that inflation actually went up more than what was expected in the month of January. This puts our overall inflation rate for the Producer Price Index for the past 12 months at 6%. So because they drop off the old month and then they add the new one for the month of January, it still gets adjusted, and instead of the 6.2, we now sit at 6% inflation for the PPI report. So what was reported? It was an overall 6% inflation for the adjusted past 12 months, but we saw an increase of 0.7% in the month of January when the market expectation was a 0.4%. So when asking the question, why is the market reacting in a negative way? It's because it should. The market should be selling off because this report, just like the CPI data report, came out higher than expected. There's no reason to sugarcoat it. There's no reason to overcomplicate it. These reports are coming in hotter than expected. Now, for everyone that's asking now, does this mean that the market's going to crash? No. As of right now, the NASDAQ market, and again, we talked about it during my live trading session with the LPP team. I even live streamed the PPI report for those that woke up 1 hour before the market opened. You can feel free to watch it. It is the one right before this video. But you can see that the overall NASDAQ market has been indicating signs of an uptrend and has been holding above the moving average. It's been making higher highs and higher lows. And one thing that I've been talking about is I've been expecting the market to drop for the past week, yet it hasn't dropped. Why have I been expecting that? Well, knowing that the CPI report came in lower than expected, and knowing that now this PPI report came in lower than expected, it has every reason on why to pull on back. We also haven't made new progress on the NASDAQ market dating since February 2nd. So since the start of February, the NASDAQ market and the S&P 500 has not made new highs. So why do you still have an open position if that open position is not making you any more money than what it did literally over 14 days ago, right? That's the question to ask yourself. Any open position is a position that's open to risk. Is there a break of pattern yet? No, definitely not. Do you have to have an open short position with the market? No, definitely not, because the market is not actively selling off. We're still trading above the moving average. We're still trying to make, higher lows. But again, the longer that the market prolongs a pullback, the harder it will drop. That's the easiest way for me to put it. It's not that it has to drop today. It's not that it has to drop tomorrow. Just that eventually it will. And when it does, the rug will get pulled. And these bulls that continue to not lock in profits or not reduce their position size at overbought levels will cry and will complain about the market's against them, the market's rigged. But guess what? It's not rocket science. The market hasn't made any progress for the past 2 weeks. So why are you still holding a full position in a market that has not shown any progress in the past 2 weeks? Again, it's as simple as that. All these inflation reports, all these unemployment reports that are coming in, they're either coming in as expected and or hotter than expected. What did Jerome Powell say last week in his discussion in Washington, D.C.? He stated that if economic data shows that inflation is coming in hotter than expected, they will raise rates more than what is expected for 2023. What do you think is going to happen when the Federal Reserve announces a larger than expected interest rate hike? What do you think is going to happen when they reduce their balance sheet up to $95 billion for the first time in the next couple of months? What do you think is going to happen, right? Yes, it is great to prepare for your long-term plays, but it's also important to take downside risk into consideration, especially when looking at the overall NASDAQ market and we're this overbought and haven't pulled on back to the moving average. The more that we prolong a pullback, the harder it will drop. And that's just something that I guess we'll have to follow up with. So as of right now, on the 5-minute time frame, we're still trading below the moving average. We're testing the EMA support. If we break below this EMA line, my Learn Plan Profit team already knows I'm waiting for confirmation. Once we break below that, I'm going to jump in with about a $400,000 to $500,000 short position, shorting the NASDAQ market as it drops and retests previous support levels. And again, if you tuned on into our live session today, I literally called out the support, not because I can predict the future, because I definitely can't, and I'm wrong again often, but it's not about that, right? It's just about understanding previous patterns and looking at previous lows as of yesterday. I respected previous lows as of yesterday. So when the market was selling off and people were like, Ricky, where do we lock in profits? It just made sense to respect what was happening yesterday and our support range that we showed around 304.50. So very happy that we reduced our position size. The market did quickly change direction right at market open. It looks like it's trying to hold, and congratulations to the bulls because you guys are definitely putting up a fight. But again, only time will tell. If we break below the EMA, then I'll start really step on the gas on my short position. But if we break above the moving average, then it's back for the bulls, right? The bulls are going to go back to retest the 310, 315 resistance on the NASDAQ, and you have to respect it. It doesn't matter about what I think or my opinion or my hopes or my desires of the market to pull on back. As of right now, I have to, again, over everything, just respect current market direction. Yes, I do believe that the market should be selling off, but it doesn't matter about what I believe. It matters what the market is currently doing right now. So if you don't want to put yourself in a tough position, then don't take tough trades, right? It's that simple. Don't overcomplicate it. Set those alerts, wait for that confirmation, and keep trading simple. I really do appreciate you guys' time. Again, friendly reminder, I do trade live with one group and one group only, and that is my Learn Plan Profit 2.0 team. If you want to learn more about it to see if it's a good fit for you, click the second link down below. You get access to our A to Z video lesson library designed for complete beginners, our daily live trading session, our private group chat, and access to our TechBuds HQ. It's a one-time payment, lifetime access, and right now we're running our biggest sale, and it's $150 off, and that's that second link down below. If you sign up today, you can watch me trade live as soon as tomorrow and every day moving forward after that. This is the only service that I offer. It's the only thing that I offer, and it's the only way to work with me on a closer basis. Either sign up for this and you get to work with me, or if you don't, if you don't want to sign up for it, then you don't get to work with me. This is literally the only thing that I offer. So other than that, if you have any questions, feel free to message me via Discord or via Instagram, and that's the first or third link down below. Also do want to remind you to pick up your favorite items at shoptechbuds.com. We have everything from your investing tees, your trading mouse pads, the apparel collection, some of the very popular tees that you guys always comment on that you like that I wear. They're all from our Shop Tech Buds store or the fourth link down below. We also have our wall art collection to pimp out your trading setup, periodic elements, especially for our new day traders, flag collection, and accessories. Again, this is all available at shoptechbuds.com or the fourth link down below. And friendly reminder, I am using the Webull trading application. It's free for everyone in the US, and right now they have a limited time promotion that if you deposit $1 and you click the fifth link in the description down below, by using my link and depositing at least $1 right away, you can earn up to 12 free shares. You earn 12 free shares, I earn 1 free share. So I appreciate your time. Hope that earned your thumbs up. Please consider subscribing, and I hope that this video got you one step closer to understanding what the PPI data report that was released today. Like always, let's make sure that we end the year on our green note. Take it easy, team.